I think people do have to remember the government is trying to move the market more in favour of first home buyers, and that doesn't necessarily mean lower prices. Nowhere has the government said we're going to do things that make house prices go down.
Welcome to Tea with Tony. This month we check back in on the housing market. Prices aren't subsiding, but there seems to be a whiff of a slowdown out there. We asked Tony if the supply side equation is changing, and we talk spending habits. It seems like things are on the up. But first, let's drink some tea. So look, we're going to start where we always do, which is with the housing market. And house prices, they seem to have increased again in April, but there's a bit of a whiff of a slowdown.
Yeah, there are some elements there of the market, I think, pulling back. Obviously, the investors have decided that with all the uncertainty out there, they are looking at other investors to see what they're going to do, who are looking back at them to see what they are going to do. So there's definitely a strong element of wait and see as far as the investors go. For owner-occupiers selling a house they own, buying another one, no great change there. First home buyers, also a little bit of a stepping back from the market, but not as much as the investors. And the interesting thing, I guess, is how long will it be before the investors go, well, actually, it's still a super low interest rate environment. What else am I going to do with the money? And then they decide they're not going to sell, and then they go back to buying again. This is what we're going to learn in the next few months.
So yeah, a lot there. As a network, we're seeing a little bit of the same with investors. I was talking to a couple of business owners this morning who said, look, a little bit of wait and see. We're just going to sit tight, and quite a lot of interest in what's happening in terms of new builds and because the rules haven't been confirmed there, have they, by the government. So they're sort of waiting, going, before I sink into a new build, I'm going to find out what the actual rules are. But it seems like there's still an appetite. So I think that kind of backs up what you're saying, absolutely. I also want to touch on this first home buyer. You've alluded to in a lot of your writing, actually, that there seems to be some hesitancy around first home buyers. What's driving that?
Yeah, this is interesting. It's a catch-22 situation. The government wants to move the market more in favour of the first home buyers, and probably that's something most people would want. But of course, first home buyers, they've never done this massive transaction before. They're a bit uncertain, they're young, they're still used to taking their guide for what to do from their elders, from more experienced people. So when they look out, biggest financial decision they have ever made, and they see a lot of other people giving warning signs, oh, this is terrible, market's going to fall away, naturally they're going to go, oh, maybe I should just wait and see also. And yet this is exactly the time when many of them should be stepping forward, because there are fewer other buyers at the auctions, fewer other people are putting tenders in, maybe a few more listings that they can be choosing from, and yet, yeah, they're stepping back because they're taking their indication from these other more experienced people. FOOP, fear of overpaying. Yeah, that's a new thing that's out there.
New favourite word.
Yeah, I didn't invent FOOP, F-O-O-P. Somebody else did that, and I thought, oh, that's interesting, I'm going to grab that one. Basically, it means that people can see the government making moves to try and slow things down, wondering, will prices actually fall? Now, in New Zealand, generally prices only fall in New Zealand when you're physically in recession. But there's been an increased proportion of people in my survey of real estate agents with REI NZ, increased proportion of the agents saying that some buyers are just getting a bit hesitant now because they're fearful of overpaying, meaning a couple of months ago, 16% of real estate agents said there's worries about overpaying. A month ago it was 25%, now it's about 37% of them saying, yeah, they're just a wee bit concerned they might pay too much in the short term.
And do you think that's kind of spilled over obviously into the first home buyers? It's the same kind of, they're a little bit concerned, oh, mum and dad are pulling back, I think I might just wait, I don't want to overpay either, particularly in markets like Auckland.
Yeah, well, I think that is an interesting thing in that around the world you've got the bank of mum and dad being quite dominant in some markets out there. They have more experience. And one of the first pieces of feedback I got after March 23 with the government's policy changes was some of the mum and dads going, oh, hang on, maybe we're not going to finance you just for the moment. We just want to see how things are going to go. And of course that's permeated to other first home buyers who maybe don't have the benefit of the parents with the money. They're thinking, oh, okay, well, if they're pulling back, maybe I'll just just pull back again as well. But I think people do have to remember the government is trying to move the market more in favour of first home buyers, and that doesn't necessarily mean lower prices. Nowhere has the government said we're going to do things that make house prices go down. It's sort of the last thing they want to happen, because naturally it'll make people go, oh, I'm not quite as clever, as wealthy as I thought I was. Maybe I'll pull back on my spending, and so the economic recovery is a bit less strong. So yeah, my message to first home buyers would be just realise the government isn't trying to push house prices down, they're just trying to make them go up at a far slower rate, which would be a good thing.
And that's a sure way for a government to get unelected too, if or voted out if house prices decline. Interestingly, again, we're in Christchurch today, and speaking to some business owners, not such an issue here. So our business owners are not seeing first home buyers slow down. They're quite active here, but quite a different market. And we were talking about, slightly, probably still compared to the rest of the country, a little undervalued, so that you can see the kind of activity prevailing here, which is just an interesting anomaly, really. You mentioned you've been talking about interest rates and kind of within the wider economy. And as a business, we tend to focus on kind of tailoring your service. We don't talk about rates a lot because we work that to suit you. But in general terms, what do you think's happening?
My favourite rate of 2.99% for 5 years fixed has gone. Basically, yeah, I've been an advocate of this for the past year. Even though somebody, borrowing just 1 year fixed and rolling it over, you're probably still going to do okay, you think. But what happens, and I've seen this over so many cycles, is that once interest rates start rising, I think from late next year and maybe more especially in 2023 into 2024, then once they start rising, people like me are going to go, oh, maybe they'll go a bit further than we were thinking. So people like me will make a worrying comment. Maybe it's not going to be a 2% increase. Maybe it's 3% that the official cash rate will go up. And then people who have been rolling 1 year fix will go, oh no, what if my rate does go 3%? Maybe now I'd better go into a 5 year fixed rate at, who knows, by then 4.5% that they wouldn't touch with a barge pole now. That's the behaviour that's going to become a problem in maybe 2 to 3 years' time. But for the moment, for most people, I think the optimal thing to do is just acknowledge massive uncertainty. No economists like myself have got our interest rate forecast pretty much right since maybe 2006, 2007. Oh, look, it's a dog's breakfast. The world has changed in many ways we don't fully understand yet. And so I guess much as I am still a fan of fixing a lot of my mortgage if I had one long term, for most people, it's a bit of structuring. It's some 1 year fix, maybe 3 years, 4 or 5 year. Spread it out. And what you can do then is buy yourself some time to adjust to whatever the interest rate environment is going to be.
And look, Tony, at NZHL, that's why we talk about getting tailored, personalised advice so you can get the right interest rate to suit your circumstance within reason of what's available, of course. We talked about this in our first discussion, is that, you were paying 16% on your first mortgage?
18.5.
There you go.
So you see, that's my basis of comparison. I'm thinking, when I was this young person, driven by massive FOMO, the fear of missing out, back in September 1987, and I bought my first house with no deposit back at the time, and I paid 18.5%. So when I see the rates at the moment, I go, I don't care if they're to fall another 0.25% from wherever they've been in the past 1 or 2 or 3 years. To me, it's exceedingly low. But that's where it's interesting. The basis of comparison for everybody else out there, of course, is something much lower. That means something quite important. When the interest rates start rising, so we'll start having a conversation about this, maybe it's 12, 15, 18 months' time, I don't think the interest rates will have to go up all that far, because all of a sudden, people who have never borrowed before, they'll learn, a floating rate means it can float up as well as down, and a 1 year fixed, it doesn't just keep rolling over at the same rate for 1 year periods, and the reaction, I think, will be quite strong here and overseas as well, because a whole generation is now used to very low interest rates.
Yeah, it's a different world, it certainly is. So I want to touch on supply, because I think you've a really interesting perspective on housing supply. So you hear in the media that it's a supply issue, we've got supply problems with housing, and you admit that, but you also, on the other hand, are talking about how a kind of a tipping point at some point, and I want to explore that because it's a common theme in our discussions. And you're saying record consents, the supply equation is changing. How and when? Let's dig into it a bit more.
Yep, okay. First of all, I'm not talking about overbuilding as in all of a sudden, there's an extra 50,000 houses around the country and the price is falling away sharply. No, as soon as discussion in maybe 3 years' time arises about, I think we're building enough, buyers will just start to pull back. They'll still want to buy, but they'll go, time is on my side, and the level of construction will naturally fall away. So I'm not talking about a repeat of the 1970s or something like that. But a key emphasis I've been making here is everybody talks about a shortage. It is politically incorrect to say there is not a shortage in New Zealand. There is a shortage of affordable accommodation, low price stuff. There's definitely a shortage of social housing. That only makes up about 3.5% of the housing stock in New Zealand versus the OECD average is over 7%. But for houses in general, people say there's a shortage, but the shortage is of listings at the moment. This past year has brought forth all these extra buyers, all these different layers of people who are going to travel and then buy. I'm going to buy and then I'll travel. The low interest rates discouraging selling. So there's been an imbalance between new demand and new supply, and the market's adjusted with prices up strongly. That is not the same thing as saying there are not enough houses overall to house people. At the low end of the market, definitely there's a shortage, state housing, etc. But for the market overall, I guess I'm not convinced. And so I've just got this concern that 3 to 5 years down the track, not now, people will realise, hang on, we do seem to have enough houses now, and the sector will just pull back a bit on the construction, but it's not going to plummet away.
And that's based on the number of consents being issued currently, isn't it? Because they're at record highs or they're hitting.
A year ago, the number of consents being issued was about 37,000 for the year to, I think that's about February of 2020. Now we're up to about 41,500. Although you look at the pace underneath, it's about 44,000 that we are running out at. And you can work this out as a proportion of the population. And we're not back to as many consents being issued per person as back in the early 1970s, but we are above average now. That's good because there are shortages in some parts of the country, like I say, especially of the low-priced housing. But at this pace and allowing for about 5% growth, we could probably build all the extra houses our growing population will need for the next 27 years in maybe 14 or 15 years. So not quite a sustainable level of house building at the moment. But there's so many people out there willing to buy, it's still going to be okay for the next maybe 3 out to 5 years.
Look, that kind of connects in to moving into kind of some wider economic discussions. The Aussies and the travel thing seems like it's a bit of visiting friends and family, a few empty planes, and you've been talking, it's not as prevalent as everyone thought, is it?
Well, look, May, June, these are always the weakest months each year for Aussie tourists coming to New Zealand. No great surprises there. My understanding is that the bookings for skiing from July are pretty good, so the snow definitely are better come. I guess the greater issue here is more the international borders, and certainly across in Australia there's a feeling of it's not going to happen this year for them opening to the rest of the world. I think in light of what's happening in India, Southeast Asia more generally, now they're thinking sometime in 2022, and I guess that's the case for New Zealand. I, for a long time, have been thinking, I guess January 2022 we're opening up. Yeah, I'm thinking further out in the year in that regard. So we've got to make the most of the Aussies coming across for winter first of all, and then maybe again for summer.
Yeah, look, and I actually live in Queenstown, and I can tell you that bookings are really strong for holiday periods for kids and skiing, but a few empty planes coming in at the moment. And that fits with that visiting friends and family kind of comment you made, makes sense. Look, you've just finished a big spending plan survey, some really interesting and quite positive data there. Do you want to share that with us?
A month ago we saw a dip in the net percentage of people saying they were going to spend more in the next 3 to 6 months. It had gone from sort of 40%, 30% down to 20%. It's back up to a net 25% positive now. People saying, I'm going to spend more. And then I can look at all the different things that people are going to spend more or less on. And I guess the interesting thing here is that correlates, it's in agreement with other surveys out there, it's going through the roof in terms of businesses saying they're going to hire people, they're going to increase capital expenditure. There's other consumer confidence measures out there which have also been increasing. And so what we're seeing happen in New Zealand is an improving economic outlook, but nowhere near as much as the improvement we're seeing in some of these economies overseas. Upward revisions to growth forecasts in China, the United Kingdom, United States and Australia in particular. They're getting record prices for their iron ore. They're screaming out for people to be working in the mines, driving the trains and trucks across there. And basically this tends to be positive for our economy as well. But even more tradespeople will move across there. A lot of people in New Zealand have bought houses over the past year, apartments, whatever, in expectation that 1 million Kiwis overseas are going to come flooding back when the borders open up. Well, we're not seeing that with Australia. I think we're going to see the opposite. We're definitely not going to see it overseas when you're looking at massive, successful vaccination campaigns overseas. And so they'll open up their international borders in the United Kingdom. People are largely vaccinated. The Kiwis are going to stay there by and large. And we're going to be sitting back here in New Zealand saying, well, when am I going to get vaccinated? We are only staying safe because we're staying locked off from the rest of the world. I have always severely questioned the likely number of Kiwis coming back, and definitely even more so now. Those overseas economies, they're going to drag a few Kiwis across there.
Just to close out, Tony, the government have announced two quite substantial policies policy announcements in the last little while: fair pay legislation and public sector wage freezes. There's been a lot of talk about it, but what I want to kind of get your view is your perspective, your economic perspective on those items. Without, it is a hot topic and quite political.
Right, okay. I think on the public sector pay freeze, people are misreading that one. The government have explicitly stated they're trying to shrink the gap between low and middle paid public servants and those that are higher paid. So they're trying to achieve that. They're not actually trying to achieve, I think, fiscal austerity, trying to rein in government spending to get the deficit reduced as quickly as possible. I've always had a view there's really no hurry to do that. So that's something they want to see, I guess, for the wage structure overall in the economy, a bit lessening of the gap out there, and hence, I guess, the fair pay agreements, which they are hoping will lead to increased growth in people on the lowest earnings out there, not just the minimum wage going up, but people lower down the spectrum as well. I suppose fair enough in that regard. I don't read it as a reunionisation in New Zealand, in that if you're working in one of these sectors and a fair pay agreement is agreed with the employers, you still get the increase if you're on the bottom there, even if you're not in the union. So it's not compulsory unionism, it's not reunionisation of the economy. The point I've made a number of times over the years is that there is a shortage of labour in New Zealand. Its price needs to rise. We need the pace of wages growth doubling or tripling in New Zealand so that the businesses which can only yield a low profit and only manage that because they pay their workers sod all, they go out of business. And those people then are available to go to higher profit businesses. And this is the key to a well-functioning economy. You need resources, land, labour, capital, going from inefficient areas to efficient ones. And the key mechanism here for the labour market is wages growth. I want to see a great acceleration in the pace of wages growth in New Zealand. Government is more aiming at reducing the difference in the top and bottom. Slightly different thing. We'll
leave it there. So really interesting final perspective there. Thank you, Tony. Just to close, just a reminder, Tony is an independent economist. His views are his own and not necessarily those of NZHL, and vice versa. Thanks again and see you next month.